So, I welcome you all to today's session, Inner Circle Mentorship Meet. And we are going to discuss about one topic, which is commodity bull run. Over the past few weeks, over the past few months, in fact, for the past 2 months, I've been talking about commodity bull run. In fact, uh, I have been talking about it since the December times. And in fact, I told about my position in metals, mining, and commodities. So, in fact, commodities has done very well since then. But that was from a fundamental thesis point of view. That is what I was saying from long time. And December, I got a confirmation that commodity stocks will do very well. Having said that, at that point of time, I said a lot of people were saying that unless and until there is a commodity bull run in the physical commodities, how can you expect a bull run in stocks? I said a simple thing that stocks move ahead than the fundamentals. Fundamentals will start moving later. First, the stocks will start anticipating that bull run in the commodities, and that is what I said in December, if you all remember. In fact, Shiv Korala was asking that in one of the weekly meets or I think weekly roundup. In that, I explained that this is how it is going to happen. And exactly after 3 months now, 4 months now, we are seeing a bull run started in the physical commodities, be it gold, be it silver, be it the industrial commodities, and some of the agri commodities. We'll be talking about all that today. So even copper. So we have seen that the commodity bull run had started, and just yesterday, after weekly close prices, it is giving a sign that everything is going to become expensive. And I have talked about the fundamental reasons for that, and I'll be also repeating those reasons today. And we'll be discussing about a commodity bull run. In fact, if you all remember, I said about the commodity bull run first in 2020, February 2020, before even lockdown happened. I said about commodity bull run. Nobody knew that COVID will happen and all this lockdown will happen and all those things happen. But I said that it is a high time that the commodity bull run might start, and the reasons I posted that in our blog about old economy. I said about commodities and I said about old economy. That was in 2019-20. Now once again, and that continued for 1.5 year, 2 year, and after that there was a pause for around 2 years. The commodity prices were languishing. In fact, the commodity prices which went on to become multi-bagger, the commodity prices itself became multi-bagger during those times because all commodities went up, be it copper, be it silver, be it gold, from 2020 to 2022. In that 2 year period, many of the commodities went up like anything. Commodities itself turned multi-bagger. In fact, we saw nickel, which went on to become like 3x, more than 3x, nickel. So many of the commodities went on, and after that, in this 2 year period, once again there was a cool off. Agro commodities are at the same place. Some of the agri commodities are at the same place when they started the journey in 2020. So from 2020 to 2021, 22, they became big bull run. And after that, in 2 years, once again, it lost all the gains which it made. Once again, it is at the same stage where it was post COVID. I will be talking about few of the commodities which happened with the such thing happened with those commodities. So but having said that, all other metal commodities haven't lost that much barring few of the commodities like steel. Steel is languishing at lows. It is near cost of production. Copper is was near cost of production. Now it has moved up. So I said that analogy at first during when I discussed in 2020 also, that we are in a commodity super cycle. Once again, I am repeating that we are in a commodity super cycle. And until recently, I was not knowing. So until recently, it means like 6 months or 8 months back, I was not knowing about the research which Quant has done. One of our community member, Mayank Jain, he introduced me to that, and I also went through that. And it fixed, like he himself says, that it fixed like a jigsaw puzzle. That is what his words are. And I also felt what I was researching, the entire research, and similarly, I got some more insights from that research also. I also shared that when, in fact, when Sandeep Tandon was there at our symposium in Mumbai, he also shared some of the inputs. So along with that, what I see it. I also recommended you to buy this book, Being Relevant. In that book, he has written, the research team has written about the commodity super cycle. And this is a part of a long cycle until 2040. It is, and within that, there was a short cycle which happened in the COVID. And after that, there was a correction. And once again, there is a commodity bull run, which is restart. It is not, it has already started. This is not what I'm saying that it will start today. It has already started post COVID. There was a pause, and once again there is a restart which is going to happen. And in the last week itself, in this week itself, we have got a confirmation that yes, commodity bull run has restarted. And we will be talking about that in this today's session. And you are going to get a lot of insights from this session. So stay tuned and stay till the end of this session. You'll get some insight which will help you take your investment and trading decisions. In fact, looking at all the data which is there today, in fact, I have decided to enter into agro commodities. This is the decision which I have taken. In fact, I'll be stocking some of the commodities in physical. That is what the decision. I did that in COVID also with ferrosilicon, but this time I want to do that with turmeric, and I'll be talking about that all in this today's session. So let us without wasting much time, let us go forward and understand what is that which is lies ahead in the future, and why I am super bullish about the commodity bull run. So let us go forward and understand why I am bullish about the commodities. So this is the chart, ratio chart of commodity prices versus S&P 500. S&P 500 is US stock market. And if you look at US stock market returns, if you plot US stock market index with commodity, means commodity divided by S&P 500, this will give you a ratio chart. What this ratio chart means, in fact, I have done a special video on ratio chart. It is available on school. Go through that. It tells you about the numerator versus denominator and various 6 type of various outcomes. The session name is ratio charts, the conviction builder, because I use ratio charts and it helps me to build the conviction apart from the fundamental thesis which I talk. And if you plot this commodities divided by S&P 500, and you know that S&P 500 is at all-time high levels. US market is at near all-time high levels. And even after US being at all-time high levels, that is commodity divided by this S&P 500, which means numerator is commodity, denominator is S&P 500. Even if S&P 500 is booming, still the commodity prices have not boomed. If you see 1970 to 1979, the commodity, investing in commodities made money because numerator divided by denominator, the ratio was going up, which means the commodity market outperformed the equity market. So this is 1970 to 1979. This was during oil embargo, and it was a high inflationary period. And the commodity bull runs are one of the hated bull runs around the world. Why? Because commodity bull run causes inflation. That is the reason why most of the economists, most of the people hate this bull run. It is one of the hated bull runs. It happened between 2004 to 2008, and once again we are seeing the similar of that, and we are at the same stage where we were in maybe 2005 or something like that. And if you see this first commodity bull run super cycle happened in here, and after that during the Gulf War, once again commodities outperformed the equities. Then during just after the tech bubble, commodities started outperforming. This is 2002 to 2008. So this was 8-year period. The stock started moving from 2004 itself, but this was a 8-year period, 8 to 10-year period. This was also 8 to 9-year period. The average period of a commodity super cycle is 8 to 9 period, 9-year period. Even if you see here, 1980 to 1989 to 1990. Sorry, this is 1980 to 1989, 90. Similar, 8 to 9-year period. Once again, it was 8 to 9-year period. And if we are saying, because see, during all the time, we are near 1980 zone from a outperformance point of view. So commodities are underperforming the equities in a big way. And if this has to, I don't know whether the spike will happen to here or here, but at least at this stage, it is highly likely that equities are risky at this stage, but commodities are not risky at this stage. Risk reward is favorable in commodities than equities, because we are at lower zones. We are not at a higher zones where we should be worried about. So we are at the lower zones. This is after tech boom. A lot of people have gone bullish on IT. I said the same thing. IT is showing the bullishness, but it fundamentally I am not seeing any big sign, and even valuations are not supportive, and I will not go long on IT. So a small tech boom might have happened, but I'm still not bullish. I am, and more than that, IT is not in my circle of competence. It is better not to talk about that, but commodities is in my circle of competence, and luckily we are going to see a commodity bull run. We might see there is a high possibility. There are pointers for that. I'll be talking about each and every pointer here. Even during the question and answer session also, we'll be talking about that. So now what has happened is today the risk reward is highly favorable in commodities and even commodity stocks. In general, equities, general equities are expensive. Even just today, I'll be opening that report also. Just remember at the end of this session, I'll be opening the report by DSP, which is called as Netra, and I'll be opening that. In that also, they have said that general equities are super expensive at this stage. Expensive at this stage. It doesn't mean that money will not be made. It might be made. Having said that, this is just that a point where even if you want to own equities, it is better to own commodity equities, because if the commodity bull run happens, naturally the commodity stocks might not fall compared to other stocks, or they might rise higher than the other stocks. So the safest way and the place to hide is either commodities or commodity stocks. It might be gold mining, it might be the steel manufacturing, it might be silver mining or something like that, metal mining and all those. So this is what is the risk of moment. General equities are at the risk on moment, risk on times, and commodity equities and commodities, all those commodities are at a risk of stage. So more than making money, it is about not losing money. And I am feeling that even if you look at from this chart, at least this chart is giving us confidence that yes, at least even if I will not make money in commodities, I will not lose here. Heads I win big, tails I don't lose much should be the approach, and that is what is favoring at this stage right now. Now, if you go now, it is about, we know that the downside is limited in the commodities compared to equities, because if you are in markets, you will never be out of markets. You have to be there either in some or the other markets, because you cannot be out of the markets completely. No one will, if it is not, because we are in a growing environment, it is all about risk management. If you could just say that equities are expensive, somebody might ask that, shall I sell my all the equities? No, it is not the way. Because we are in a growing market, it is all about managing the risk. And at this point of time, holding commodity equities makes sense because they are safest and they are the cheapest. If you look at the valuations of metals, and especially gold mining is the cheapest sector entire world. I just had a interaction with Sahil Kapoor just few days back, and we were talking about that general equities are cheap, but gold mining equity is the cheapest sector around the world. Now what that tells you is, at least I will not lose money. When you are buying something cheap, at least you will say that I am not going to lose money. Now we are not here to just not to lose money, we are here to make money. So how do we ensure that? So the biggest reason for that is dollar index and the dollar index setup. If you look at the fundamentals of US, they are worse. We all know. And the same thing happened between 2006-7 also. A lot of people, there were smart people who knew that fundamentals of US is not good. It is not in good shape. In fact, the people were like Michael Burry were betting on US markets, and ultimately the recession happened later. But few of the people were knowing it from 2005-6 itself, that at some point of time, US economy might burst. Having said that, and the biggest problem for that is the total debt which US carries. And why I think, and I'm just, this is not a conspiracy theory, this is my thesis, which I say that if commodity bull run has to happen, everything becomes expensive. US is at that stage. I have said it multiple times that ना घर का ना घाट का, because आज तो वो रेट रिड्यूस करने की बात कर रहे थे, बट क्या होगा, कमोडिटी बुल रन की वजह से फिर से इन्फ्लेशन स्पाइक हो जाए, और अगर वो इन्फ्लेशन स्पाइक हो गया, तो इंस्टेड ऑफ रिड्यूसिंग द रेट दे माइट हैव टू इंक्रीज द रेट्स. Just think what will happen with the US economy if they rise the rates. Now, let us say if commodity bull run doesn't happen, in that case also, if they will reduce the rates, it's a risk to equity markets. Why? Because if you see the past of US markets have collapsed after the interest rate cut. Major of the money flows down to emerging markets and US equities fall. Why? Because even reducing interest rate at this stage or any stage, for especially at this stage where they are in, it gives us a signal, it will give a signal that something is not right. Why? Because I've been saying about it that if US interest rates are reduced, it is good that they hold on the rates for a long time. Even if they say that inflation controls and a commodity bull run doesn't happen, US, what we say, US is at that stage. US is a country which is not a old economy country. It is a new economy country. US has been growing on innovations, global innovations. It is a global innovation leader. And whenever a country is a global innovation leader, it is able to, even though there are problems in the US economy, it is able to postpone that problem for next decade. So even though the debt of US is increasing, but US is, countries never go bankrupt. But that problem, just after the recession, once again they recovered, and that they didn't go into long recession. They came out of that. It was not that easy after global financial crisis. But why it is happening? It is happening because of innovation which it takes place in US. So they are able to delay that the problems which US has. And even US is having a currency which is called as world's reserve currency, which is dollar. Globally, the dollar is traded. And if you see the amount of money which is printed by US, the US debt balance sheet, which is it has grown, it is able to do that without any worry because US can export inflation. US is the reserve currency of the world, and because of that, it can export its inflation to the world. Having said that, recent times there has been de-dollarization which is happening. So there are some countries, I don't know whether it will really happen or not, but the things are moving in that direction. And because there are some people now who don't have the faith in the system, that is why Bitcoin born, and Bitcoin is becoming famous now, because people think that US is looting. When you are printing money, it is like looting, and you are looting your citizens, you are looting your this. So in that way, the place for Bitcoin became secure. And there will be many of the people who will start feeling that there is a need of such a currency which is decentralized, because US dollar is a problem. Why it is a problem? Because an amount of money can be printed by government, it can export the inflation, and there are few countries in the world, the global power shift is happening. I've been talking about that. The world is tilting towards east from west powers. The powers are getting shifted from west to east. So when that happens, de-dollarization is imminent at some point of time. We can't say that it can happen in 3 months, 6 months or so. It takes decades to do that. It takes decades to happen that. Having said that, when it might take 1 decade or 2 decade or 1.5 decade, when it is going to happen overall, when the dollar will lose its reserve status, that is when the dollar index will crack down. And if you see dollar index, it has been giving a sign of a cracking down, but I think there is some or the other way, it is not getting cracked in short term, but the long term thesis, the fundamental, as far as whatever I have understood and researched, I understand that dollar index have to get cracked at first from 104 to 94, and in second stage till 75-80. That might also happen. And this is based on my thesis of what I understand about the world, the global power shift, de-dollarization, and all those things. Having said that, there might be flaws in my study also, so you have to take it on your understanding, you have to also research about it. But as far as what I have researched, am able to connect these all the dots, and I think that we are heading towards de-dollarization. We are heading towards a breakdown. Why I'm talking about dollar here at this moment is because when the dollar index cracks down, commodities become, in other countries, buying commodities become cheaper. When in other countries buying commodity become cheaper, it will fuel the commodity bull run. First, the commodity bull runs is started by speculators. If you see on the ground, there is no demand as of now, and that is the reason why the commodities like steel, there are commodities, various commodities which are trading near cost of production. It is unsustainable. I've talked about that in multiple cases. It is unsustainable. At this point of time, we knew that at least even if the commodity prices doesn't go up, they are not going to go down. Now, when there are some smart people, I call it as smart money, who know how the world works, they are the first time smart speculators, and that is when they make the position first. And the recent weekly charts which I'll be sharing with you, that is indicating towards that only, that the smart money has now entered into commodities, and hereafter for the next 6-8 months or 1 year or so, we might see a commodity bull run, because there are few people like what I'm thinking about, what dollar de-dollarization and all those things, because when the dollar softens, commodity bull runs gets boosted. Apart from that, there is one more reason why I'm bullish on commodity bull run. In the past 1 decade, from 2010 to 2020, it is 1 decade, the whole world has not added capacities to produce more commodities. Not even in India, it is about around the world. If you see gold miners also, gold miners have become very cautious on increasing the capex. So there are supply side issues. Now, when the demand goes up, if you see even rubber plantation globally, if you see India over the past 1 decade, there are no new plantations which have came up. Even if you see tea, no new plantation have come up. Sugar, no new means apart from the total, if you just manufacture, and there is one more shortage also. Some of the sugar is getting converted into ethanol now. All that is what it is saying. 10 years of supply side issues leading to supplies and shortages, and breakdown of dollar index, plus smart money moving in, it will create a Lalapalooza effect. I've talked about that Lalapalooza effect. It is called as critical mass. And we are at an inflection point where I think that critical mass has just achieved past 1 week. The smart money way has started moving in. And I am believing that, because ratio charts also are also saying that commodities and commodity equities are cheapest and having best risk reward. So if you are in markets at this stage, I believe one should have a larger part to gold mining equities, look, gold and silver precious metals ETF, and it might be uh, it might be steel, copper, the producers, manufacturers. So create a portfolio of diversified across all this, and it has to be done on an objective basis, because what is the mix for me, what is good mix for me is not the same mix good for you, because I might own lot of gold mining, but because I believe in that thesis, but it has to done on a risk basis. What is your risk appetite? Get on to the number, then do a calculation wherein you build a diversified basket, because when you are building a diversified basket, you are naturally protecting the downside, but build it across gold mining, silver mining, steel, other commodities, agro commodities, their mining, or mining means producers. So if you create a diversified basket across these all with permutation combination is also that important. If we do that better, it will be serving us in a better way to protect the downside. That is what I believe in. So I've told about this. Now I'll share some of the articles even after this session. This is a snapshot of one article which is called as de-dollarization, the eroding dominance of US dollar. It is a beautiful article. I'll not open that here, but after this session, I'll be putting that on the group. Just go through it. You'll be able to understand what I'm saying, because I'm bringing the points which will help you build the needed conviction. Now, there is one more article which is about record high national debt is the fiscal time bomb for US Congress, and they must diffuse it. And this is January 2020, 18 January 2024. I'll also share this article, news article with you. It is pointing towards that. I'm helping you to connect the dots. When I started this thesis in 2019, I was not fully having all that connecting dots. But today, all my dots have got connected, and I am seeing a super cycle. I am seeing a commodity bull run, and the best way to own is by owning mining companies, but undervalued. Understand that. If you buy blindly companies, it is like gambling. by undervalued mining companies. And I believe gold mining is the most undervalued mining sector. Apart, it is not even steel. It is not even iron ore. I believe gold mining is the cheapest mining sector. That is one. Because I was bullish on steel mining in COVID. It was the cheapest, but today it is not cheapest. Look at the valuations of the stock. They are not cheapest. But gold mining, I believe, is the cheapest sector today. And that is what I'm going to do. Now, once again, relevant to this point, that de-dollarization. So de-dollarization, look at Bitcoin. Bitcoin gives you a signal. In fact, in April 2024-23, I said that was here when the bull run in Bitcoin started. I said during that time, the bull run in Bitcoin had started. We will see that soon in the equity bull run. And within 15 days, because this was March 15th, I think, when I said about Bitcoin. Have you read my post on Bitcoin? Then comment in the comment box. I said about bull run has started in Bitcoin. And I also said that at some point of time, equity bull run will start. So this started here, and the Bitcoin is nearing highs, and de-dollarization का सीधा सीधा जीता जागता उदाहरण है Bitcoin. Because if Bitcoin is rising because people believe in de-dollarization. And if that is at the high today, and when the dollar index, in fact, I missed to point out that there is a head and shoulder pattern which has created, and there was some manipulation, I think, what has happened. But usually after this should be a fall, but there was a pseudo shoulder, second shoulder which happened. And you all know what happens after head and shoulder pattern. I believe the breakdown below, because here also it tried to go up, and once again on a weekly closing basis it came down. And this is saying something. What it means is it is struggling to break down, but some or the other, maybe it might take some few weeks, it might take some few months or so, or it might even something like happens like government has devalued their currency. It might even happen at that. We don't know what can happen. Devaluation of currency might also happen. We don't know at what stage it can happen, because they know they are in problem. So devaluation can happen. I don't know what don't take this as a what I'm saying, but I'm seeing the possibility. What can bring the dollar down? Look at and start thinking about that possibilities. And I believe there are a lot of possibilities. Once it breaks down from 100 to 94, the commodity bull run itself, commodity prices itself has given a signal now that the dollar index will come down. Now let us go forward and understand. So here Bitcoin has given a sign. Now, one more sign of a de-dollarization is whenever the gold cannot go up unless and until there is a reversal on dollar index. And gold has given a breakout. What it means is either gold breakout should fail or dollar index should come down. And I believe gold breakout will not fail. Why? Because there is a fundamental thesis to what I am saying about gold, and it is discussed with Sahil Kapoor. That video is available on YouTube. You should go through that. I talked about gold mining equities, and the it is pointing that we are heading towards that thesis of gold. What we talked in that video. Go through that video. It is available on YouTube. So I believe that gold failure breakdown will not happen. The breakdown of dollar index should happen, because that is what gold is saying. That is what Bitcoin is saying. Now, once again, let us understand that if gold is going to see a bull run, this is latest report of DSP Netra of this. Gold mining firms and gold both have underperformed the stock over the last 10 years. Gold mining firms have their own .com bubble at its peak of this last cycle in 2011. The firms were in deep neck in debt. They were doing a record capex and guiding for higher gold prices. Anybody who had seen 99 to 2011 gold bull run would have made similar assumption. But gold peaked and miners were left with huge debt to service amidst the declining top line, challenge the profit margins, hurt the sector more. Crude oil prices traded over 100 years for next 3 years. This was a sort of worst of all the words. scenario for this sector, the sector went through a derating over the next one decade. So, in fact, we were discussing about this. Here, during 1999, gold miners, many of the gold miners were at bankruptcy stage. Do you know there was a fund, mutual fund, the same US based mutual fund, which was investing into gold mining? Available. This is a ratio chart of which tells FTSE Gold Miners Index versus FTSE World Index. This is blue line. This is saying that Gold Miners Index is underperformed for past 10 years now, and MSCI has outperformed because numerator is shifting on the downward, which means that gold mining equities have been underperforming. They are one of the hated sectors. Now, gold, US, this is gold versus world MSCI World Index, which means gold divided by global equities. That also says that global equities have outperformed the world index because the ratio is turning down, and gold has been underperforming for the past 10 years or so, 10-12 years. What this says, because asset classes, gold is such an asset class, in long run it gives a similar type of return which gold returns in long run are equal to the equity returns, Sensex returns. Mean reversion is imminent, and gold has been the underperformer for the past 10 years. It will start outperforming now compared to general equities. When the gold starts outperforming, the gold mining companies will naturally show a lot of profits. And I've discussed that case in the video. And I also say that don't expect what happened in 1999 times similarly, which it is not going to happen, because at that point of time companies were available at bankruptcy valuation. Today the companies are debt free. They are like JSW Steel. They are debt free companies, and average yield is around 3% on the entire fund. Dividend yield is around 3% on the entire fund. That is the biggest advantage. So they are completely debt free, and they are large cap companies. I'm not even talking about the small cap companies. Recently, gold miners small cap index has gone up 50% within 4 weeks. But this fund doesn't own much of the small cap. They own a lot of large cap. So it is much safer. The large cap index has went up 30%, but small cap gold mining small cap index has went up 50%. But having said that, gold mining small cap index are not that reliable. When you are betting on gold mining as a theme, it is better to own large caps. If you find something from small cap, it is great to own, but gold mining is the place to be. That is what it is saying. Now, commodity super cycle. There is one expert who is talking about commodity super cycle. He also explains why commodity super cycle has started in 2020 and why things that at least till 2028 it is going to remain. I'll just play that video. I'll share both these videos, but because of time, we don't have enough time. I'm just sharing you the important video.
These benefit from it. Break out this thesis for us. You believe that we're in the early innings of a commodity supercycle that started when the pandemic started. So how much longer does this supercycle have to last? What commodities benefit from it?
All of them is the answer to number two. And the way super cycles work is they typically last at a minimum a decade. We're 3 years into this one. The shortest bull super cycle on record is about 9 years. So you can kind of see we're probably third inning. You know, use that baseball analogy. And what they do, super cycles tend to lift. It's kind of like that tide that lifts all boats, all commodities, because there's a certain amount of money that is flowing in, because prior to 2020, it was 10 years of terrible pricing. Producers didn't want to produce commodities, so now we're short commodities. That's what's propelling this whole super cycle. And before you can get producers back up again, running and really churning out different commodities, it ends up being roughly a decade each time this cycle happens. And this kind of history does repeat often.
So that means based on history, you know, it's history, but we have like another 5 or 6 years left in the super cycle.
Yeah, I'd say at a minimum. You know, the cycles in the last 100 years are a little shorter, so they're around 10 years. If you go back into the 1800s, they're closer to 20 years. So you can have 20-year cycles. I would say we're going to be probably closer to 10.
All right, yeah, we're just looking at a chart where, for the audience, the gray areas of the bear market, and then you see the spikes after the bear market. So I want to talk about two of the most widely held and traded commodities. That's oil and gold. You have a price target of $90 for oil year end, 22% upside, $21.50 for gold, about a 6% upside for year end. Give us a sense. How do we get to that point between now and then?
Yeah, I think you'll hit the recession first. You'll have those recession fears around, is everything slowing down? And that's roughly why I'd say oil has backed off that $100 level that it was last year. It's really anticipating that recession. But as we start moving into the back half of the year, it'll be very clear it's a mild recession. And by 2024, we're probably taking off again globally from an economic standpoint. I think oil starts anticipating that. And by year end, we're 90. And our 2024 targets are even higher. They're into the hundreds.
All right, so you say we have super cycles. We have ups and we have downs. So I think a big question for a lot of our audience, should they just always hold commodities and kind of wait out the bad times and then benefit from the rallies? Or is this the one part of the market you can kind of time because you know you have these 10-year periods?
Yeah, you do not need to be in commodities all the time. But you, like you said it, Frank, in that 10-year period, that's when you want to own it. Great diversification benefits. Think last year, stocks down, bonds down, your average commodity was up 14%. That's what happens during bull super cycles. And commodities were also up in 2021 and 2020.
Okay.
Kind of notice the pattern.
All right, John, I'm going to put you on the spot just a little bit. What's one of these commodities that maybe outside of oil and gold, obviously, one of these commodities that might see a bigger upside considering all the economic conditions that we're facing right now and also some of the macro conditions? Of course, we have a war in Ukraine that's impacted agriculture as well.
Yeah, probably platinum. Essentially what you have is there is a historical relationship between gold and platinum. There are only 4 precious metals. Platinum is rarer than gold, so historically trades at a 30% premium to gold. Right now it trades at a 50% discount. It got hit from this move into electric cars because platinum tends to...
I think this much is enough for you to give that insight on commodity super cycle. Have you all got this understanding on commodity super cycle, which he was explaining why it is that and why it is going to end? It is going to be there at least till 2028. We are in 2024. It is at least 4 years away. So hope everyone has got an understanding. Now why I was talking about commodity bull run. Now, apart from the fundamental thesis and connecting the dots and global power shift and de-dollarization and many things, supply side, there is a technical breakout confirming my fundamental thesis, because our approach always has been fundamentals, technicals, value and trigger. If you are just a fundamental investor, your job is 25% done. If you are a value based investor, you are just 25% done. If you are a technical investor, it is 25%. If you are a news based investor, you are 25%. So to be a holistic investor, you have to blend fundamental, technical, value and trigger. First, I told about the fundamental thesis. Then I told about few conspiracy theories, which I have been hearing, which is connecting me the dots that those conspiracy theories are true. And I'm connecting all those put together to make a holistic analysis. I am posting in front of you. Now I'll be talking about each and every commodity in general, in particular, which is giving me the sign and helping me to connect the whole dots that failure of US is imminent. So the first commodity is copper. Copper has given a breakout on weekly charts and it is called as the up flag breakout. This is with volumes. It will also give a breakout on monthly charts at a later stage. But at least copper, are we going to see a 30-40% rise in copper? Just understand what is going to be with what is going to happen with the inflation. Copper, if copper becomes expensive. This is aluminum. Aluminum is at a up flag breakout, up down flag breakdown failure. This is called as down flag breakdown failure. And if this down flag breakdown failure is happened, which means that it has not gone down the downside. In fact, it has turned from that. It can be compared similar like what up flag is. In that case, are we going to see a minimum of 310 rupees on aluminum? Now the prices are at 223, 224. So just think what is going to happen with the inflation. Crude oil. Crude oil is also at that stage. Are we going to see a 60% rise in crude oil over the next 1.5 years till 2026, 2025 end? High possibility, because charts are saying that. Now, I said about one thing that a lot of people were asking, even Bhavesh was saying me, "Are bhai, ground pe kuch demand nahi hai, and you are talking about commodity bull run. How does that happen?" I said that, see, sir, see, you will see that on charts at some day. I said that in December itself that this breakout will happen. And there were reasons to that. I posted that on the group. You also go through that. See, what happens is smart money moves in first. These are not speculators. These are speculators, but with smart money. They know how the world order is changing. The smart money has already entered in. A lot of people might see, you might even ask Bhavesh. Bhavesh is there in this meeting, I think. Whoever is trading in the commodities, he will ask, भाई price क्यों बढ़ रहा है, मुझे नहीं समझ में आ रहा है. Ground पे तो कोई demand नहीं है. So smart money has already started moving in. अभी डिमांड बाद में आएगा क्योंकि उनको फोमो आ जाएगा. जिस दिन डीलर जो स्टॉक करता है स्टील, उसको फोमो आ गया ना कि भाई आज नहीं स्टॉक करूंगा तो अगला माल मेरा महंगा हो जाएगा, वो और फिर तेजी करेगा. उसको देख के फिर से ट्रेडर आएंगे. आज तो सिर्फ स्मार्ट मनी आया है, अभी तक ट्रेडर आया नहीं है. ट्रेडर 6 महीने बाद आ जाएगा. ट्रेडर फिर से महंगा करेगा. एंड दैट इज हाउ द ग्रेटर फुल थ्योरी वर्क्स. एंड सबसे मैड लोग जो आएंगे, मतलब फुलिश पीपल, फुलिश रिटेल इन्वेस्टर्स विल कम इन आफ्टर द ईयर, मे बी ईयर, बिकॉज स्टील का शॉर्टेज है. स्टील का डिमांड नहीं है उतने. लॉट ऑफ पीपल टॉकिंग अबाउट डंपिंग फ्रॉम चाइना एंड ऑल. चाइना इज ओपेक. डोंट डिपेंड ऑन दैट. चाइना में रिसेशन और वो सब, नोबडी नोज व्हाट इज हैपनिंग इन चाइना. चाइना जितना प्रोड्यूस करती है उससे ज्यादा कंज्यूम कर सकती है अगर कंट्री का इकोनॉमी सुधर गया तो. एंड रिसेंटली वी हैव गॉट अ साइन. US, China has reduced the interest rate to boost the economy. Recently, one more few updates have come which says that China is very strong. Recently, China's manufacturing उसको बोलते हैं PMI index, Purchaser Manager Index, has gone up above 50. ये 50 के बिलो होता तो यूएस में, चाइना में प्रॉब्लम है बोल सकते थे. चाइना में प्रॉब्लम नहीं है. इट इज क्लियरली गिवन. जस्ट लुक एट द पीएमआई डेटा ऑफ चाइना. इट हैज क्लियरली टोल्ड. और वो कब बूम पे आ जाएगा, नो, इट इज ओपेक, वी डोंट नो एट दिस पॉइंट ऑफ टाइम. इंस्टेड ऑफ breaking our head on what China's economy will be there, we know that commodities में पैसा गंवाना मुश्किल है because of the data points which I am telling. अगर डेटा पैसा गंवाना मुश्किल है तो why worry करना what China will do? It is all about risk reward. Otherwise you will never be able to invest. And I am seeing that steel spot में long breakout है. And there is one more. This is steel longs NCDEX. I think this earlier chart which I said was Mandi Govindgarh. This is market for that. This is Indian market. Another steel long NCDEX. This is NCDEX पे है. चाइना में अभी तक ये नहीं आया है, बट मीन रिवर्जन इज इमीडिएट. चाइना के प्राइसेस अभी भी ऊपर नहीं है, बट इफ यू लुक इट फ्रॉम, अभी यहाँ आरएसआई का डेटा नहीं लाया, आरएसआई डाइवर्जेंस है. प्राइसेस आर एट बॉटम. ये सपोर्ट प्राइसेस है, यहां से ऊपर जाना चाहिए. दैट इज माय एक्सपेक्टेशन. तो ये है. अपार्ट फ्रॉम दैट, टर्मरिक, दिस इज द कमोडिटी विच आई एम लाइकिंग. And I'm in fact talking with, I'm yet to make my whole thesis on turmeric. But after a long time, I traded it in turmeric in 2007-8. That was my first time when I traded in turmeric. But I am going to stock a lot of turmeric. In fact, I might buy it in NCDEX 6 month later contract. But I am seeing this is one of the commodity which I have found out. But I am going to do a basket of major commodities. See, it is about how you want to play it. It cannot be, some people are asking me, should I buy silver ETF? Should I buy this? I cannot give you that answer. It cannot be straightforward answer. The strategy has to be designed as per your requirement and all those things. I've been talking about that. Otherwise, it will be like gambling, and I don't gamble. So as simple as that. So I have to create, I'll be owning NCDEX commodities. I'll be owning Indian commodities. Some of the Indian commodities, I might buy futures also. Usually I don't trade, but ये futures में ही investment proper हो सकता है, क्योंकि आपको लंबा contract मिल जाता है. तो usually वो trading नहीं कर रहा हूँ ना, इसमें invest कर रहा हूँ. I might even buy gold mining equities already I'm holding. So majority, 100% of my, let me tell you, my family's money is some or the other way. Either it is related to transformers, either it is related to some power producers, or it is in 100% in commodities. That is my conviction. Apart from Arvind Fashion, which I am owning. So majority, it might not be 100 even, it might be 95, but 95% of my money is today in commodities. I'll start NCDEX soon. Today itself, I talked with IFL NCDEX team. This is soybean. This is soybean, and soybean risk reward is highly favorable. Now the prices are at the same stage where they were in 1990. Risk reward is favorable. The sowing has not increased much, and there is a high level of margin of safety. So overall, if you look at the conclusion, I believe general equities are at risk on stage. Commodities, including precious metals, industrial metals, agri-commodities, are at risk off stage. Risk reward in commodities is better than equities. General equities valuations are expensive. I believe better to own commodity equities and commodities as an investor as well as a trader. This is my entire conclusion about entire session on commodity bull run.